Hi and welcome to this morning's morning report with me, Richard Perry, market analyst at Hantech Markets for Wednesday, the 5th of February. Please make sure that you remember that this video is for informational purposes only and that you have read the disclaimer which is written at the bottom of our morning report page on our website. In Financial markets over the last day or so have been fairly muted actually. There's not a great deal of market moving data that came out yesterday, and there was a bit of consolidation. You could argue maybe a bit of respite for the investors that had been battered over the past few days with the big selling pressure that we'd seen, and certainly that could be depicted in the fact that you've got the VIX, for example, that has come down significantly from that high above 21 yesterday. 2 days ago, it came back well below that 20 mark. So that suggests that volatility was slightly lower in front of today, and what we're looking at is now the economic announcements to ramp up once more. We had the PMIs all out on Monday for the manufacturing service sectors. You've now got the service sector PMIs for the countries around the world out today, and that could once more produce a bit of volatility back into this market. The key one that we need to be looking out for presumably would be this US ISM figure, which has not been below that 52.6 level, so that could be an interesting mark. I think the expectation is for 53.6, so just slightly above there. But anything below that 53 would be considered to be a negative, certainly, as it could become what would be a 4-year low there on the services sector PMI for the States there. So watch out for that this afternoon. But obviously before that, we've also got the ADP number for the States. That is the private payrolls company that is considered to be a little bit of a harbinger for non-farm payrolls on Friday. Can be an indication, although last month was very badly guiding of the payrolls number. 238 was the ADP. 238,000 was the ADP number on Wednesday, and then followed by the Friday number of 74,000 on payrolls, on non-farm payrolls. So it didn't work that time round, and maybe that could mean that traders will look at it with a bit of a pinch of salt today, and maybe not have too much waiting for that move today. So that comes this afternoon at 1:15. Our chart of the day that I'm going to be looking at is going to be this euro sterling figure, which once more we had been looking at last week as a correction within a downtrend, and we've seen that once more. I think on this in this euro sterling chart, we're back towards this 55-day moving average, which is the red line on the chart here. That capped the last few rallies and seems to have capped it again yesterday. So that could be another selling opportunity. You've got this sort of pivot sell zone, I would call it, pivot levels around here, which had been proved to be supportive, and have now in the last few weeks have now turned into a sell zone, sort of negative selling area that the bears are using as their opportunity to get back in again and sell the euro. So you've still got this big downtrend on euro sterling. Moving averages are all falling. Momentum indicators in bearish configuration. RSI continues to rally towards 50 and fall away. The MACD is below that zero line. So you'd be looking at any sort of rallies back into that sell zone as a chance to come out of this chart once more. And certainly on the intraday basis, as you can see here, you've got this. I've drawn in a line here at around about 8,300, and that does seem to be a bit of a pivot level again. That's showing on the intraday chart. So anything around there up towards this 83.50 sort of mark here, 83.40, 83.50 would be, I'd say, an area to sell this chart. Which you may well get a chance to today. Anyway, thank you very much for listening, and I hope you get a chance to listen to our other morning report charts, which are all posted on our website, and I will speak to you later.